Hi, it's Michael from Futures Insight, and today I will be teaching you guys about supply and demand in the stock market. So first, how this presentation is going to work is first we're going to talk about what are supply and demand. Then we're going to talk about how to chart supply and demand, then how to trade supply and demand, and we're going to give some real life trading examples from the past, and then we're going to do 2 days of live trading. And then we're going to go over some final remarks and conclusions. So what are supply and demand? So supply is the amount of a product available and demand is the number of buyers for said product. And then an important concept that I'll be coming back to is the idea of equilibrium, which is a point where supply equals demand. So before we can talk about how supply and demand relate to the stock market, we must first understand how the price of a security is determined. So for every security, there's a bid-ask format. And the bid is going to be the highest price someone will buy it, and the ask will be the lowest price someone will sell at. And then the spread is going to be the difference between the ask and the bid. So as you can see on the figure on the right, at every single price levels, there are a certain amount of shares available for purchase or sale. However, the people placing, for example, buy orders at or below the bid or sell orders at or above the ask are not actually moving the market. We call these people passive participants, and we call them passive participants because they're simply adding orders to already existing levels. They don't deplete or fill any orders themselves. Given no new market participants, the price will always stay the same since no one is ever crossing the spread. However, people who cross the spread are called active participants, and they're active participants because they're placing orders to buy at the ask or they're placing orders to sell at the bid. They're depleting these already existing order blocks and causing the price to move in a direction because once orders at a specific level are depleted, price will move in that direction. So with this knowledge of market price structure, we can debunk the phrase that the price went up because there were more buyers than sellers, because we know that for every transaction, there's a buyer and a seller. However, we can tweak this statement to say that the price went up because there were more aggressive buyers than aggressive sellers, also known as there were more buyers willing to cross the spread than sellers willing to cross the spread. And this caused levels where people were selling at to be depleted, and then the price moved upwards as a result. So now that we know how the price of a security moves through active and passive participants, we can now discuss how supply and demand work in the stock market. So supply and demand exist at every single price level. So at every level, there's a number of people willing to cross the spread to buy or sell. And theoretically, assuming every market participant is rational, the price of the security should never move unless new information is released. And then we would call this an efficient market, because this means that the market has everything priced in and everyone has come to a consensus and has found an equilibrium in the stock price. However, if you've ever looked at an intraday price chart for any security, you know this is not the case because every participant has a different level they perceive as good for buying or selling. For example, Bob might think $1 is good for buying ice cream and $1.25 is good for selling ice cream, while Sally thinks that 90 cents is good for buying ice cream and $1 is good for selling ice cream. However, this is not to say that people do not overlap in their sentiments. So then when we're looking at using supply and demand as our edge in the market, we're looking for areas where many people share the same sentiment. So essentially, imbalances in the number of buyers and sellers willing to cross the spread. So to chart supply and demand, I typically like to do it on the 15-minute and hourly charts. However, you can do it on any time frame above 5 minutes. So typically, the time frame you draw the zone in is the one it will most clearly react in. For example, if you draw a demand zone on the hourly, it will bounce normally cleanly on the hourly to 15-minute chart. On the 1-minute chart, it could still bounce very choppily. So when charting, you typically want to look for areas where the price reverses. And this is pretty much the same process as drawing support and resistance levels. But instead of a line, we're using a rectangle. So I prefer using supply and demand over support and resistance because not every market participant wants to buy at a single price level on the dot. However, they normally do tend to clump around this little range of a few points. So normally, I'll draw the zone from the highest or lowest wick of the supply or demand zone, respectively, in the middle of the reversal candle. However, don't feel the need to follow this process exactly. It's fine to be a little bit imprecise because at the end of the day, these zones are used for guidance. We are just making annotations to refer to for a reminder. Because this strategy isn't like a super strict indicator that gives exact entries and exits. It's more of a way of annotation that can assist traders that rely on watching price action. So let's go through what we just learned and apply it to a real life example. So the chart on the screen right now is SPX on the 15-minute from November 10th, 2022 to November 16th, 2022. Feel free right now to take a screenshot and annotate it or view the chart in an app like TradingView. So I'll leave this screen up for like 5 more seconds, then I'll move on to revealing how I charted it. Alright, so here's how I would have charted the previous image. As you can see, I pretty much just drew a rectangle everywhere where the price consolidated and then reversed. If your chart looks a little different than mine, feel free to ask questions about why I drew things or why I drew things a certain size, or even feel free to criticize my chart in the comments. I'm not going to claim to be some trading god who knows everything about trading and will know where the market's going all the time. I'm always open to hearing more ideas and learning from others. Now we'll jump forward a few days and we'll see how price action behaved around the zones we just charted. So as you can see, we gapped down under the demand zone at 39.05. Then the next day, price gapped up into our supply at 39.75 and presented a good short opportunity. It then revisited the zone twice more, bouncing off of it first and then breaking it the next day. SPX then immediately broke through the zone at 39.95, and that was a place where I would have ended up going short and had to stop out. It then moves into the 40.25 zone and bounces off before breaking it later in the day. So supply and demand aren't always going to work, so that's why it's important to use stop losses and not to rely on it as a single source of truth. As we just discussed, supply and demand isn't a perfect strategy. It's a reminder that a reversal may happen around a certain level. We still have to use our knowledge of price action to determine proper entry and exit locations. I like to personally read wicks and candlestick patterns as secondary confirmation along with the supply zone, and I will also sometimes use RSI as the third confirmation to increase my confidence on a trade. So to teach you, I think it's best to show you through an example, so I'll walk you through the range we just charted, and then I'll give a few live examples after. So we just charted supply and demand on the 15-minute time frame, and I'm going to be trading on the 1-minute time frame. However, you can also do this on the 5-minute if that's more your style. So before we begin, here's an annotated chart of where I'd enter trades based on the zones we previously charted. The circles are the areas where I'd enter a trade, and the color represents the side I would take. Green would represent I would go long, red represents I would go short. So feel free to practice on the circled areas before or after watching my explanations. So in our first example, we see the market opens a few points above our demand zone. Immediately, I'd be thinking about watching for a demand test to go long. Here it's very important to be patient and not chase a move, especially an opening bell move. Although the price does move up and it would have been a successful long, this is not a guaranteed move and there's no edge in the market here. You can burn yourself very often and you're pretty much just gambling at this point. However, once the price touches the demand zone and bounces with the wickless green candle, so the green candle that has no selling wick on top, I would go enter long with a 5-point stop loss and most likely a 5-point take profit. For the most part, I trade supply and demand with a 1-to-1 risk to reward ratio and a 5-point take profit and stop loss. So in this scenario, the 5-point take profit would be triggered, but if I didn't have a take profit, I would take my profit at bullet number 3, which is on that big selling wick. So as you can see, we could have technically held the position longer and made more money, but the way I trade supply and demand is to use it as a scalping aid because for the most part, it's very accurate at predicting the direction for the next 5 to 7 points, and it starts to break down the more you get away from the zone. In our next example, we're going to be playing a supply zone, and just like in the first example, we open near the supply zone and we should be prepared to go short in the case of a supply test. Similarly, we must also be patient and not chase the opening move, although coincidentally again, chasing the opening move would have worked. So when the price gets to the supply zone, we need to wait for a secondary confirmation still because it doesn't bounce off the zone initially. It actually has pretty decent momentum going into the zone. However, we see this big selling wick, and then at the same time we see the selling wick, RSI is also showing oversold. So now we have our second and our third confirmation. And this would make it a pretty high confidence trade in my opinion. So then once we enter this trade, the take profit would trigger by the second arrow where it says take profit on buying wick. And then coincidentally, we would also be manually taking profit if we weren't using a take profit level. Later on, the price forms a triple top near the top of the supply zone, which can also serve as a possible re-entry. So you play the re-entry, you would take the 5-point take profit and stop loss again, and you would exit either on the take profit or on the big buying wick we see at the bottom of the zone. After exiting the trade, I'd be wary about re-entering another short position because at this point, we're now consolidating and compressing inside of the zone, which signals a bigger move up, which will likely break the supply zone, which as we can see later, it does end up breaking the supply zone. Now we'll begin the live trading portion of the video. So before we begin that portion, I'm going to go over my trading view setup. So first we have the yellow line, which is going to be VWAP for the current instrument I'm trading. And then we have the white line, which is going to be SPY's VWAP relative to the price of the current instrument. I find that ES will react to this, so that's why I like to keep it up on my chart. And then we have the pink lines, which are going to be 5 points up or down from the current price. And then since I use a 5-point stop loss and take profit, I like to have those lines up so I can visualize where my stop loss and take profit would be if I were to enter a trade right now. And then below the chart, we have volume, and then below that, we have MFI and RSI. If you have any questions about my trading setup, feel free to comment that below. And with that, we'll now begin the live trading sessions. All right, y'all. So pre-market right now, we're about 1 minute from market open. Right now we are in a demand zone, so I'm looking for a bounce out of this demand zone. And we also have this supply zone up here at 40, 45-ish. And then here, I think this is going to be a pretty heavy supply zone because above here, there's a lot of room up. There's not a lot of resistance until then. So if we break above it, I might actually look to go long in like maybe 14 days from expiration SPY call. But if we break under this, I'm just looking to go long again at 4,000. It's currently day after Thanksgiving, so I anticipate the market's going to be kind of quieter. It's going to be a decent amount of chop, probably. But I think right now it looks pretty good going long out of here. I think I'm just going to go long here. And then I'm going to see if we can bounce out this supply zone. This demand zone. Like I said earlier, today is going to be a lot of chop, so I'll be speeding up most of the trading session. However, you still will hear my live commentary whenever I do something like change my take profit or stop loss, or I just say something insightful. Just going to move this up to break even, make sure we don't go red. And then, actually, I'm going to actually move this a little above break even. I'm thinking like right here, just cover trades and commission. And if stop loss hits, stop loss hits. Yep. So stop fills right there. Get this pretty big red candle that immediately gets bought up though. Might be another chance to go long again if we can get this candle back down into back down here. Yep. I'm gonna look for it to bounce out of this zone again. Not gonna be too sold on anything yet. Let me get my pink lines back up. Kind of like this buying wick again here. I'm gonna go long again. I'm gonna move my stop to right below these two buying wicks right here. No clue exactly what the market wants to do right here. I think I'm gonna move my stop a little bit lower to like right there. Still gets a pretty good risk to reward ratio. I just want to move it down a little bit right now because of the amount of chop we're getting. I don't want it to accidentally hit and for me to have to re-enter. It's still above what our original stop was, so I don't feel too greedy doing that. Stop now going to be at VWAP, or yeah, stop's now going to be at VWAP. Actually, I think we're going to put it right here. Just a little one tick under, just in case we come back to VWAP, retest it. Alright, that just hit our stop. So then, I guess we take a little small greener. It hits our stop and then immediately bounces up. I think that's one thing I need to get better at. I need to not be too afraid of letting my trade go red. Like, obviously it wasn't going to go red because we were still above our entry point, but I think that was a little too ambitious of a stop, but you can't be mad about it. As you guys saw, we were having issues the whole trading session with moving up our stop loss and moving it up too high, such that we'd get stopped out and then the trade would go back in our original direction. At the end of the day, we still did come out on top, but as you can see, if we just never moved our stop loss, our trade would have gone the full 5 points of profit instead of the 1.25 points we ended up getting. Overall, not the day I wanted, but supply and demand worked well today, and we will look to capitalize on this success in our next trading day. Welcome to live trading day 2. This is the immediate next trading day from the last one. So last one was on Friday and today we're on Monday. So over the weekend, we gapped down a little bit right up over here, but then we are in demand right here. So we might look to go long at open, but I'm not super confident about this demand zone right here. However, if we do get down to right here around 30.91, I do feel confident about going long here. As far as supply, we just have supply here at 40.15. Also not super confident about this supply, but if we do make it up to this supply, I am very confident that this will hold pretty strong. Like I said last trading session, if we do get above this supply zone right up over here, I feel pretty confident going long on a longer time frame. Pre-market, I'm not really looking at any patterns in particular. I did draw this upper trend line right here, and I'm assuming this trend line is going to be tested some point today, and hopefully it breaks if we do go long, but I will kind of be on alert for that. If the first candle does dip down into like this zone right up over here, I think I'm gonna open long and then I can get bought up. For example, if the candle can look something like this, I think I'm going to go long, but anything else, I think I'm gonna sit on my hands and wait a little bit. All right, looks like we missed the initial demand move, but I don't think I'm gonna be too mad about that because at the end of the day, the first candle is always unpredictable and I didn't want to get stopped out. Now that we're in this zone right here, I think I'm gonna look to go short, see if we can get any sort of reversal though. I think I'm gonna go short on this. We got a really good wick. As usual, we're going 5-point take profit, 5-point stop loss. I feel pretty good about the levels. I think now we're officially stops to break even. Pretty heavy buying wicks here. I think I'm just gonna close my position. Yeah, I'm not gonna be too mad about it if sure we didn't get the last final point of movement, but I think closing right there is gonna work fine. I think this looks kind of like it wants to bounce back up again, so I'm not gonna be too mad about it. I normally only trade the first hour of the day, and this ended up being the only trade I took today. So this will be our last live trading session for the video, and if you want to see more, feel free to comment that below. Now, hopefully after watching the live trading sessions, you have a better understanding of how to trade supply and demand. So to wrap up this video, I'll be reiterating the overarching pieces of information I'd like you to take away from this. So first, markets move because of active market participants. These are people crossing the spread and depleting order blocks. However, passive market participants still provide liquidity to the active participants. And secondly, the point of supply and demand is to chart the areas where market participant sentiment overlaps, so places where people are willing to cross the spread to buy or sell. Third, supply and demand isn't an infallible indicator. The market doesn't move because of some rectangle you drew on some candlesticks. People's sentiment change and can be drastically affected by world news, especially if you're using an old zone that you maybe charted months ago. It's unlikely to work because people probably have changed sentiments since then. Finally, we use supply and demand as annotations to aid our understanding of price action. It's simply a reminder that price could reverse in a certain area. Thank you guys for watching today's lesson on supply and demand. If you enjoyed the video and learned something new, please like the video and subscribe to the channel for more content. If you dislike the video, feel free to dislike, and in the comments tell me why you dislike the video. I'm always looking to improve my content, and I'll take any feedback you have.